Yeah, thank you so much. And thank you so much for having me today as well. And indeed, I think maybe good to kick off with what you just mentioned. Well, what are the benefits of green bonds, right? And I think there are several of them, both for issuers and for investors, but perhaps mainly focusing on issuers. I think our personal experience really shows that the companies that start issuing green bonds, they make significant improvements when it comes to transparency. So let me explain that maybe a little bit better. Well, the core of a green bond is that the use of proceeds of the bond, so the funds that are raised via the bond, that they will be directed towards environmental friendly projects. Well, but for a green bond to work, investors need to then trust that these proceeds will actually be used to finance exactly what they say they will finance, so environmental friendly projects and not anything else like carbon intensive assets. So for the issuer to actually give this assurance, it commits to regular reporting. And these reportings then push them into gathering ESG data internally. So think, for example, at EPC level of buildings, think, for example, as the energy consumption of buildings after a renovation, etc. And this type of data is not something that a lot of companies really have off the shelf, which means that the process of issuing a green bond sometimes really triggers these companies to start gathering ESG data and measuring their sustainability impact. And yeah, nowadays also with ESG regulation gaining more and more space in Europe, we also see that green bond issuers are definitely more prepared for the upcoming regulations. So it allows them to then more efficiently navigate these kind of ESG regulation wave that is coming without facing too many disruptions. So it's it's kind of a nice additional benefit that we see from green bonds. And maybe to add to that, I think particularly nowadays, a lot of investors are more and more looking at green bonds from a holistic point of view. So, which means that they don't want to they don't want the green bond to exclusively finance one project. So, for example, an oil and gas company that is building one wind farm, they want to confirm that the issuer really has a strong ESG commitment overall, and that the green bond is feeding into a wider ESG plan and a wider ESG strategy. So green bonds also allow issuers to then start conversation on the ESG side with investors to efficiently then communicate their ESG plans. So it is not anymore about just one or a few projects, as it was initially when the green bond market really started. It is now more and more about, having a concise and holistic picture when it comes to sustainability. And well, I think this holistic view that green bond investors have obliges then also companies that are coming to the market to beef up their sustainability plans, to really push the ESG agenda internally. And sometimes that really happens with a bottom-up approach. So the funding team, for example, wants to take advantage of lower funding costs that green bonds also offer, which is another additional benefit. So they start with, okay, we have a plan, we want to issue green bonds, and that involves then connecting with different departments internally, the sustainability department, if there's one, the financing team, if you're thinking about bank. So several different departments, and it obliges them to really look at ESG internally. And sometimes that really, makes their way all the way up to company management. So I think that's quite an also interesting benefit that we see from green bonds as well. And I think at ABN AMRO, we have also accompanied, several issuers on their ESG path. We have really seen firsthand what a positive impact a green bond can have when it comes to increasing ESG transparency, advancing the sustainability agenda of issuers internally, as I just said, interacting more strongly with investors on the ESG side. And I think we have not only seen that positive or these benefits from green bonds through our clients, but also mainly internally. ABN AMRO ABN AMRO actually was one of the first banks in Europe, and actually the first commercial bank to issue a green bond back in 2015. And we have since then taken several steps into delivering on our sustainability goals. So only bank financing alone does not make us meet, and I think any institution actually meet their carbon reduction goals. So green bonds play kind of a really big role here. And well, since then we became then a bank that looks at ESG from several angles, and an experience that we also nowadays happily share with our clients. So if you look at, and maybe just wrapping up the question as well, if you look at then the benefits of green bonds, I think we can really sum it up as a bit of a chicken and the egg story. You know, an issuer can come to the market issuing green bonds to sort of highlight their sustainability commitments and create an ESG dialogue with investors. So kind of seal the package on their ESG journey. But at the same time, they can make use of green bonds to really advance on their sustainability journey, to take important steps into advancing on their goals, to meeting their carbon reduction goals. So yeah, I think both of them are somehow strongly connected at the end of the day. And I think if we can also highlight in a short note as well, why we also think that green bonds are a really important instrument when it comes to fighting climate change, or really helping and assisting to transition to a low carbon economy. And I think that's not only something that I'm just here speaking, it's also something that the European Commission itself has mentioned in their recently released sustainable finance package, that green bonds are a powerful tool to finance the transition to a low carbon economy. And that's also at the heart of why they are developing, for example, an EU green bond standard regulation. I think the EU is very much aware that a lot of financing is needed in order for us to achieve our 2050 carbon neutral goals, and that this is something that cannot be done exclusively through public financing, though they rely a lot on private financing, in order for us to achieve our goals. I think private financing plays a crucial role there, and green bonds fit them super well as an instrument that can therefore help boost financing towards where it's actually needed from a carbon transition point of view. And well, at ABN AMRO, we've also actually already conducted research that shows that there is really a direct relationship between green bond issuance and renewable energy generation in Europe. So let me explain that a little bit more clearly. What we did is we compared the reported energy production financed via green bonds with the total amount of renewable energy produced in Europe. So as I previously mentioned as well, when an issuer comes to the market with a green bond, they need to do regular reporting. And that mainly involves then reporting also on their environmental impact or the environmental impact of the green bond. So in case of renewable energy projects, this usually involves then reporting on the installed capacity and the energy generation of the projects that are being financed via the green bond. Well, our research then showed that the green bonds finance actually around 25% of all the renewable energy generated in Europe. And we see that also mostly, or almost all actually, balance sheet debt that comes from European utility companies towards renewable energy projects are also financed via green bonds. So that means that more green bonds that come to the market will naturally translate into more investment towards renewable energy projects. So again, this is really a proof that green bonds can have a strong environmental impact and really help the EU to achieve its carbon reduction goals. So achieve an efficient transition to a low carbon economy. And maybe to add to that as well, and that's something I also mentioned previously, green bonds have also been proven to be very useful to kind of change the mindset of a business. So to really print sustainability kind of across the entire organization. So I think that already tells you definitely that green bonds are supportive for a company's transition. And I think a good example here is what we saw with Berlin Hyp. So that's the German bank, right? And well, it was an issuer or a bank that first came to the market also in 2015. They have issued the first green bond back then. And a few years later, they introduced these kind of pricing incentive for eligible business to grow the portfolio. So what they were doing is they were giving or providing discount to their clients if it would refer to energy efficient mortgages. So you would be able to get a discount on your mortgage if it would refer to an energy efficient building, right? And this was really a way that they found in able to kind of continuously to grow their portfolio, their energy efficient portfolio, and therefore continue to also fund themselves via green bond. So the portfolio grew kind of tremendously since then. And I think Berlin Hyp had become, as it is today, really a true example when it comes to sustainability. So basically, it's a company that changed the way they do business, you know, from just a mortgage bank provider to very much a bank that provides energy efficient mortgages due to their green bond strategy. And they have nowadays also CO2 reduction targets then across their entire mortgage portfolio. So I think, you know, that's also really proof that green bonds are very important too for companies in general in order to finance and to transition to low carbon economy, as I just mentioned. And I think maybe the also bring perhaps the other point of view here. I think a common counter argument that people usually use when it comes to, you know, saying why green bonds saying why green bonds are not a good tool to finance the energy transition or the transition in general is when it refers to greenwashing. So that means that usually these people say, okay, if a company that is in transition or they're using the green bonds to finance transition projects, and that, this is mainly referring to greenwashing. And I think good for me to point out here is that I think especially, particularly in Europe, regulation and the green bond market in general has evolved quite significantly over the past few years, which means that investors are more advanced on their analysis. They take a more holistic approach, as I mentioned, so they put issues really under more scrutiny. So the risk of greenwashing in Europe has reduced significantly over the years. So I think, you know, if we look at that argument, okay, that companies coming to the market with green bonds, companies in transition coming to the market with green bonds, that refers really to greenwashing. I do think that, no, that's not a valid argument specifically here in Europe. And that I think we have really reached a point where green bonds can be a super powerful tool to assisting these companies to transition to a low carbon economy. I think when it comes to regulation in Europe, we have seen that, you know, the EU has been bringing over the years, and I think more specifically, I think over the last 2 to 3 years, more and more regulation to the market, and ESG regulation specifically. However, if we look at the type of regulation that's coming to the market, it's mainly focused on reporting and transparency regulation. So maybe explain it a little bit better. It's the type of regulation that's mainly focused on making ESG data available and making sure that companies and, you know, undertakings or institutions in general, they are providing more and more regular non-financial reporting, which is something that nowadays is done on a sort of voluntary basis. So they're really moving from a voluntary basis to a mandatory basis. And of course, that's also supportive to the green bond market in general, because when you look at, you know, challenges that the green bond market has, still one of the biggest one refers to really data availability. So really issuers that would like to maybe come to the market with green bonds, but they don't have the data available internally either, because it's something that they have not been, gathering, or it's something that, it's just not there yet. So, for example, a good example is in Germany, of course, EPC label of buildings. It's not an information that's publicly available because of, privacy concerns. So that being said, it's really, something that the EU wants to tackle via the upcoming regulation. However, I think if we look at the regulation at the moment, it's of course really far away from being perfect. And I think, to explain that a little bit better, I think what I was mentioning is that the EU, the regulation that the EU is bringing to the market is, of course, very much focused on bringing data and making these entities report on ESG data, but they're not very much concerned when it comes to the quality of the data that is being brought to the market. And of course, the EU needs to start somewhere. They're themselves in a kind of a learning journey. So it's completely understandable that this is the focus at the moment, and the quality is definitely a next step. But I think, it's definitely something, it's definitely a big challenge that remains in the market, and also in the green bond market. So maybe good to mention now as well is that within ABN AMRO, we have just recently conducted an ESG survey, an ESG investor survey, where we have asked actually 55 dedicated ESG houses in Northwestern Europe what their view is when it comes to not only green bonds, but, ESG bonds in general. And the majority of the respondents have actually said that the data quality is the biggest barrier for the green bond market at the moment. So this means that data quality is what is actually, or is seen by investors as what is actually hindering the growth of the green bond market. So that means basically that investors still have a lot of trouble comparing green bond impact in general, that they find very hard to assess the ambitiousness level of the use of proceeds of these green bonds. So I think that really highlights that, of course, data availability has, improved significantly over the years. This is something that's being tackled by EU ESG regulation, but the data quality definitely remains a challenge, and definitely remains a barrier to the green bond market in general. I think that's mainly it for just something else maybe I would like to mention as well. And coming back to the ESG survey as well, when we look at, whether investors or the respondents of our survey, whether they think that there's too little regulation in Europe, or too much regulation in Europe, and, which one is actually a barrier to the market. Our survey actually showed that investors seem to see that too little regulation is a stronger barrier than too much regulation. So even with all the advancements that we have seen from the EU to bring more and more regulation to the market, so I think over the last 3 years, we can really call it an ESG regulation wave. Still, investors seem to see that we need to have even more regulation. And I think that's then also moved from a regulation that is mainly focused on data availability, which is also very important, but to a regulation that is also then more focused on the quality of the ESG data that is coming to the market. Yeah, so I think to conclude from my side, I think, definitely green bonds are a very powerful instrument, in general, to advance ESG strategies, to, make sure that issuers or companies in general are really able to properly communicate on their ESG plans. It's a powerful tool when it comes to financing the transition to a low carbon economy. And of course, there are a lot of challenges that remain. But I think if we also look at where we came from when the market first emerged in 2008, we have made several important steps. It's a market that has been growing, has been evolving both on the issuer side, on the investor side, that become more and more, they're able to more and more properly assess ESG plans and green bonds that are coming to the market. So I think also EU is intervening as well. Of course, there's more EU regulation that is coming to the market. So, there are challenges, but I think nevertheless, we have made important steps, and that shouldn't undermine as well the importance and how powerful the impact of a green bond can be. Thank you so much for having me, and I think also for our listeners, please feel free to contact me if you have any further questions, if you'd like to hear more about our research, if you'd like to hear more about our ESG investor survey, which we actually conduct twice per year with really dedicated ESG houses. I'm also always free to join the discussion, and happy to always give my opinion and my views. Thank you so much.